So today we're going to be looking at the ROBO ETF from ETF Securities. This is the Global Robotics and Automation ETF. Now I think this area is pretty important because we always hear about automation and how it's going to somehow replace all of our jobs. Now look, this is quite a complex issue, but I do think it's worth looking into. And looking at things from the future from 2021, we can probably assume that this trend is going to grow in the future. After all, it is a mega trend. So that's why it's worth looking at for sure. Now I'm also going to talk about how you can buy this ETF and other ETF securities ETFs as well, completely brokerage free using a new broker called Perla. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, as usual, this video is not financial advice. I'm not a financial advisor. Please make sure you do your own research as well. I'm just talking about things based on my research and my perspective, so do your own due diligence as well. Let's get into the ETF. So of course, the ASX code for this ETF is ROBO, which is of course pretty fitting. Now, it does give you exposure to robotics, automation, AI, which is of course going to be a megatrend as we spoke about earlier. There is going to be a bit of a revolution, which will of course be growing into the future. So as you guys might know, there are lots of jobs out there right now which are quite menial and they are very repetitive. They are basically admin tasks and admin jobs which can be essentially automated. And if you're watching this video, you might even be doing one of those jobs right now. Now, I work at one of the big four banks in finance, and even in my job, there are so many aspects which I think could be automated, and those aspects could be made a lot quicker. And personally, I would love that because it would make my job so much easier and it would be less boring because all the boring stuff and all the repetitive stuff is basically just automated and gone away. So essentially, this ETF finds the companies in this sort of automation and AI space that are essentially leaders, and this ETF allocates a percentage to those companies. Now, this ETF is actually pretty similar to the ETF from BetaShares, which is Robots or RBTZ, ASX RBTZ. And that ETF I'm going to be doing a video on as well, so we'll look at it in a different video. So currently, this ETF is tracking the ROBO Global Robotics and Automation Index, which the index has been actually running since 2013. So it's been roughly around 8 to 9 years. And we'll see the returns for the index as well as this ETF in just a second. Now, this ETF comprises of roughly 200 global companies, which include stuff like 3D printing, security, logistics, and the index also has some other criteria for market cap and some other very important metrics as well. So let's look into the benefits of this ETF. So the first benefit of the ETF, as you guys can see, is exposure to the growing robotics, automation, and AI intelligence theme, which is going to grow in the future. Now, as we know, as technology gets more and more advanced, this is the next stage of what's going to be possible for us. So as companies search for more and more profit and try to maximize these profits and returns, they're going to really try to invest very heavily into this sort of stuff to automate processes and just make things a bit more efficient. Now, of course, as usual, as normal workers like you and me probably, this does raise quite a bit of concerns as to what's actually going to happen to our jobs. Are our jobs going to be replaced by automation? Are we going to be unemployed? What's going to go on? So there's lots of worries and lots of questions around this sort of stuff. But personally, I'm not too worried and I'm not going to go into too much into that. But if you guys do want me to make a video on this and what my thoughts are on automation, do let me know because I do think it's pretty important. But overall, if I was to summarize it in one sentence or so, I'm not too worried about automation at all. Although my job does involve some aspects which could be automated, it's really not something to be worried about in the long term. The second benefit of this ETF is the access to the expertise of ROBO Global, a recognized leader in RAAI solutions. Now, these guys do a lot of research, so they're pretty well positioned when it comes to this sort of stuff and maintaining the actual index. And the last benefit of this ETF is, of course, the diversification into areas that are underdeveloped in the Aussie market. Now, this one I feel quite heavily because if you look at the ASX, if you just dissect an ASX 200 or like an ASX 300 ETF or ASX 300 index, you'll find that like 50% of our market is just financials and materials. Australia is pretty big on the banking sector and the mining sector, right? There's very little allocation towards actual technology. And if we compare the Australian economy to something like the US, we are lacking quite behind when it comes to this sort of tech trend that's going on. And this basically makes our tech sector being so tiny, and we're lagging behind other competitors like the US and China and Asian countries as well. But luckily though, Australia is quite an advanced country, which means that we can still invest into this space via ETF. So we do have a plus there. Now guys, let's look into the returns for this ETF, but before we do, if you have found any value so far, please leave a like or subscribe. It really does help out. Let's get into it. So looking at this ETF, the current price is $88.12. Looking at the 1 year return for the ETF, it sits at somewhere around 35%, which is pretty solid. Looking at the year to date return, it is somewhere around that 7.6% mark. And looking at the return from inception, which is roughly September 2017, the return since then has been around 75%, which is pretty good. And if we dissect this graph even more, we can see that after the March crash that we saw, the ETF really took huge strides, and the return since that March bottom period until now was somewhere around 75% as well. So it's done pretty well since then. It's recovered quite nicely, and there's been a huge gain, as you guys can see. So since we only have around 3.5 years data for this ETF in terms of the actual price, let's just have a look at the actual index directly, and let's just cut to the chase. So looking at this graph right here, we can see that the returns have been pretty insane. It's gone from a value of around 100 to a value of roughly around that $1,000 mark. So it's basically 10x in like 11 years, which is just, it's pretty insane, let's just say it. So if we look at some key statistics for this graph, we can see that the return has been roughly around 2,500% since 2002, as you guys can see right here. And the index actually started in August 2013, but you can backtest the index because the company still existed back then. So if you backtest the index since then, 2,500% is the rough return you'll be getting as per the little comment right there. So if we take that 2,442% figure or 2,500% return, if we annualize that, we can see that the return annualized is 19.14%, which again literally beats any economy out there over the long term, which means that for that period, this ETF beats any broad market index out there. So you can really see the power of this industry. And if you ask most people, if you ask them, are we at peak automation? Are we at peak AI? They're probably going to say no to you. They're going to say that AI and automation has so much room to grow. There's so much that could be done in this space, and we're really at the beginning of what's going on. And most people you meet, and probably you might believe as well, that there's lots of room to grow. And personally, that's my belief as well. So you can really see the trend and what's going to happen in the future. Now, of course, I'm not saying don't buy into broad market ETFs like A200 or VAS or IVV or VTS, whatever it might be. I'm just telling you guys to look at other options as well and consider some other mega trends that are going on. Personally, for me, broad market ETFs like A200 and IVV will always have a place in my portfolio for now anyways, but I do think it's pretty important to look at some sectors which are growing pretty quickly, and we can probably take advantage of this. We may as well. Now, you can buy this ETF completely brokerage free using a new brokerage platform, and it's CHESS sponsored as well. This platform is called Perla. I literally mention Perla in every video about eInvest or every ETF Securities ETF that I mention, and the reason being is because you do get quite a lot of value. So basically, if you were to buy the ETF and hold it for over a year, you will pay no brokerage, and you only pay the brokerage fee once you sell. So once you sell, the fee is going to be $9.50. So effectively, you're paying less than $5 for buying and selling an ETF, which is very cheap. Now, of course, this video is not sponsored at all. I wish it was, but if you do want to check it out, you can use my affiliate link, which is basically my first name, Fyzee, and this will give you an extra free investment credit as well to get started. And this link is going to help me out as well and support the channel. So go check it out if you're interested. So looking at some more detailed information on the ETF, we can see that the inception date is September 2017. So as we saw with the graph that we saw earlier, the ETF has been listed since then, and it's been roughly around 3.5 years. But do remember that the index has been around for quite a while. As we saw with the previous slide, the index has been around since 2013. So it's been roughly around 8.5 years-ish or so. And there doesn't seem to be any signs of the index disappearing because those guys over at ROBO Global are doing a lot of research into the area. The management costs are 0.69% per year. So roughly you'll be paying around $69 per $10,000 invested. Now, of course, this cost is not the lowest at all, especially if you're used to investing in those broad market ETFs like A200 or VTS or VAS. Your fees are going to be like 0.1% or lower. Your fees won't be higher than that. So seeing such a high number may be a bit surprising, and you might be reluctant to give this a go. but do consider the potential growth and the past growth that we've seen and what it's tracking and what this ETF could be worth in the future as the trend grows. And if you compare it like that from a long-term view, it is quite negligible, and I always say do not focus too much on the fees. Always look at what the ETF is tracking, and most of the time the fees are very negligible and it's worth it to pay the fees. The distribution frequency of this ETF is annually, which means that you'll be getting a dividend once per year. Now once again, this is not a dividend based ETF anyway, so if you're looking for dividends, you may want to check out some e-invest ETFs. Most of their ETFs pay a monthly dividend, so that might be more what you're looking for if you're looking for those dividend based ETF. If you want to check out those e-invest ETFs, there should be a link somewhere here as well. Go check it out. So this ETF is obviously not a dividend-based ETF. It is mostly for that long-term capital growth with the trend as it continues. Jumping into the top 10 holdings for the ETF, we can see that there's a bunch of companies right here that I have absolutely no idea what they do. Some weird names like Fanuc and ServiceNow and ATS Automation. I'm sure they're pretty good in this sort of space. And the only real company that I can recognize is Nvidia, because I do play a lot of games. But that's the beauty of an ETF. You don't necessarily have to research every single company and look into it to see if it's doing the right thing, and if it's involved in that sector. We can basically trust the people who are creating these indexes, who are doing the research very thoroughly, and we can trust them to do the research. Checking out the sector allocation, it is 47%, basically 50% to IT. Now personally, obviously not too surprised here at all. This trend is very technology based when it comes to automation and IT and AI, so that's pretty standard. We also have 37% to industrials and about 10% to healthcare. So industrials could be companies that are focused on logistical stuff and automating those sorts of processes. When it comes to the healthcare side of things, it could be companies that are focusing on 3D printing to help with medical stuff, so that makes sense. And lastly, looking at the country allocation, we can see exactly what I spoke about earlier. The US is leading the way when it comes to this sort of stuff at about 47.7%, so basically 50%. And we can also see lots of Asian countries here and lots of Western countries as well. And this is exactly what I was talking about. There is basically no exposure to Australia because Australia doesn't really have too many companies and investments in this space. So luckily we can use ETFs to diversify ourselves in this space. As for me guys, I really like this ETF, but before I buy into anything, I'm still going to do some research by looking into BetaShares ETF, which is RBTZ. Once I research that ETF, I'm going to hopefully try to make a decision and basically see which one is the best one for me. But let me know if you guys are looking to invest in this one. So guys, if you want to check out a different mega trend that's going to hopefully grow in the future as well, I've done a whole video on that already. You can check out this one. This is the ACDC ETF. This is based on battery technology and lithium technology, so go check it out, as it's used quite widely in electric cars and sustainability and clean energy as well. So go check it out. And guys, thanks for watching. Please like and subscribe, and I'll see you in the next one. Bye now. The ETF has been